Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Are your personal loans all set to rise? Will it be more difficult for you to get personal loans or a new credit card? What will happen to the small ticket borrowings you do from new age fintech apps after the RBI's recent move on increasing the risk weightage for unsecured loans? If these are the questions you have been thinking of, well, this is the video that you need to watch. Joining us is a very special guest to demystify all of these doubts that we have after the RBI's recent move. Adil Shetty joins in. He's the CEO of bankbazaar.com. Mr. Shetty, welcome to Business Today Television and thank you so much for taking the time out. Last few days or so, this has been on the top of the minds of various current and prospective borrowers as well, as to what will it really have an impact on the borrowers that have been currently holding on to some loans in the consumer category, or those who had been mulling to take a fresh loans as well. First up, if you could break it down for us and for our viewers, what exactly are secured and unsecured loans? Because the RBI talks of clear impact on the unsecured loans. So which are the loans that are clearly getting impacted here?
Thanks, Sakshi. So we've been getting a lot of questions about this also. So I'm glad you're addressing it. A secured loan is typically one that has a property attached to it. So think of a home loan, vehicle loan, a gold loan, and so on and so forth. An unsecured loan is a loan which doesn't have any security or guarantee of property to a bank. So essentially, think of a personal loan, think of a consumer durable loan, or think of a credit card. And this risk weight change is primarily for unsecured loans, excluding education loan. But I want to make one key point, which is one very important thing for your viewers. If you're an existing personal loan borrower, nothing is going to change for you because you've already signed your contract in the past. So nothing is going to change for you. This is going to affect, right, only new borrowers after the regulation kicks in.
Okay, this is a very, very important clarification. All those having current loans on, nothing will happen to your loans currently. So no change for you. Only prospectively, this rule will apply. So do we understand it as basic and as simple as that future personal loans and future consumer durable loans and future credit card loans will get more expensive?
Okay, 2 points there. Now, as a consumer, because in this show we're interested from a consumer's perspective, you are protected because your personal loan essentially is a fixed rate loan. So it's not going to change, right? Same thing with your consumer durable loan. It's a fixed rate loan. However, interestingly, and this is a technical point we don't need to go into, the risk weightage on the outstanding AUM has been done for both existing and for new loans. But from a consumer perspective, right, you're protected because your contract is signed. Now, let's come to your second question, which is also very important. Now, because of this change, right, industry experts believe that certain types of consumers for certain products might end up paying anything between 0.2% to 0.4% more. But we'll need to see how it plays out. Because are you a high credit score consumer above 750, which a lot of lenders compete for? Maybe your rate up, right? Might see your rates go up because of this increase in cost of funds. I think time will tell.
Okay, Mr. Shetty, I'll interrupt you. There was some internet disconnection, so we couldn't hear you very clearly. What are the scenarios you talked about? Could you repeat yourself, please?
Yeah, so I said that for the future, in terms of personal loans, consumer loans, you might see, right, depending upon whether you're a good credit score consumer or not, and depending on how many banks and NBFCs are willing to lend to you, it depends on that to see how much your rate could potentially go up. Industry analysts are saying that rates could go up between 0.2% and 0.4%. But I believe for high credit score consumers, which is 750 plus, right, which is what we advise people to have on Bank Bazaar, I think that you'll still have a range of choices and nothing much is going to change for you as long as you're maintaining that high credit score worthiness.
Okay, so how will this risk weightage be calculated for banks? Could you help us understand a little bit of that? Say a bank has, a portion dedicated for personal loans, 100 crore rupees book or something like that. How does this calculation happen really?
Okay, so it's fairly technical, but I think there are two things we want to convey to people watching. So one is right. If a bank had lent out 100 rupees before and was taking 100 rupees as the AUM, now in certain cases they'll need to take 125 rupees as the AUM.
Yeah.
Now they have to retain a certain number of capital adequacy, let's say 15% as the capital adequacy. Now instead of doing that 15% on 100 rupees, they have to do it on 125 rupees. That
Right.
means some rupee value of additional capital needs to be kept aside as part of the capital adequacy ratio. This pushes up the cost of funds of holding that capital adequacy, which is what we're saying in ballpark terms, right? For unsecured personal loans, between 0.2% to 0.4% will be the additional cost of funds for the lender now to make that loan. Now, a personal loan might be lent out at 15%. Now, imagine if there was an additional 0.2% to 0.4% cost. Now, where is that cost going to go, right? And is that cost going to be passed to the consumer, or is it going to be absorbed in the net interest margin? All of this, right? I think time will tell. And it'll also depend on the consumer category, saying, are you a high credit score consumer or not?
Okay, fair enough, sir. Would banks' profitability also get impacted, and maybe the credit card distributors' profitability get impacted because of this?
So see, this change is only for unsecured credit. And if you look across the banking sector, unsecured credit, right, is less than 10% of the total AUM of the banking sector. So
Sure.
you're talking about impact coming on a certain 10 to sub 10% segment of outstanding banking credit. And then, right, you establish the zero point 0.2 to 0.4% change in cost of funds. So overall, right, I think that what the RBI is saying, and rightly so, is we need a prudent credit culture. People need to be aware of what unsecured credit they're taking, what kind of interest they're paying, what kind of fees they're paying. I think this is part of the directives and directions that have come out from the regulator saying that let's go down this path, but let's tread with caution. So overall, I don't see the impact on the banking sector across the entire industry to be too high because it's a smaller segment of their books.
Okay, fair enough. Another point that a lot of consumers may have been thinking about is how do they now go ahead with the consumer durable purchases that they do. Some of the data that's already coming out in news reports suggests that as much as 40% of the consumer appliances are today sold on EMIs as well. Will it really make sense? A lot of these retailers would push consumers that in case you do not pay your money up front and convert your purchase into a 6-month, a 12-month, or an 18-month EMI, you may also tend to add on some cashbacks or some benefits as well, and ultimately you will have to pay less than you would have to pay on an upfront amount. So will it make sense for consumers now to convert their consumer purchases to EMIs or not at all now?
So I feel that no cost EMI or the EMI cost option is something that always needs to be evaluated to see if it makes financial sense to you, right? See, if I'm a consumer, I'm buying something on Amazon today, no one can make me do A or B. I have a choice to make. I'll just give you an example which is very popular during the festival season that has just started. So there are no-cost EMIs, and Bank Bazaar offers these on our co-branded credit cards, where you don't pay anything extra. You pay the same price that you pay on UPI, but you get 6 months, right, to pay back that amount as part of your credit card bills. This is a genuinely good offer, right? Now, if you don't want to take that offer, then choose to pay in UPI or choose to pay with a debit card. So it really depends on the quality of the offer. Now, will those offers get more expensive? There is a chance, right, that as the cost of funds now increases, most industry analysts believe that there could be an impact, right, of 0.2% to 0.4%. But keep in mind, right, that this is a small amount in terms of increase in cost and funds. But as a consumer, I would always check, right? Am I saving money by taking this EMI offer, or am I not saving money? So always bargain on the best price. Make sure you get the best price on the product. Then decide, right? Do you want to pay in cash? Do you want to pay in UPI? Or do you want to make use of a no cost EMI or EMI, either on a credit card or as a standalone consumer durable loan?
Fair enough, sir. Another question is that, will it now get more difficult to have access to personal loans or credit cards, especially by the first time borrowers as well? Because for all of these banks and NBFCs, now they have to be cautious when they lend out as well. So cautious and, delay perhaps some of the borrowings that they may have to, give out as well, and also reduce the number of loans that they give out. So how will this really impact?
Right. So the first point to keep in mind, Sakshi, is that the market's been growing very fast, right? Which is what the RBI has also been calling out. So personal loans grew 24% last year, and it's been growing at that clip for over 3 years now. So it's growing very, very fast. What this might do, right, and what could be the intended impact that the RBI wanted is that this needs to be tempered a little, but growth will continue because keep in mind, India is a market where less than 5% of India has a credit card, right? There are 1 billion credit cards in the US, there are 1 billion credit cards in America, and India is a very young, emerging country. So growth will be there, but could that growth in unsecured personal loans be slightly tempered? It could be. I think broadly it comes down to the type of consumer you are. Because please keep in mind, right, is that if you're a good credit score consumer, if you're going to pay back your loan, uh, there is always a good return or profit in it for the lender. The problem starts, right, when we go to consumers who, for various reasons, right, might not be able to pay back the loan. Now, that's a problem for everyone. It's a problem for the consumer, it's a problem for the regulator, it's a problem for the lender. So I think if you're a good credit score consumer, this is what I'll leave your viewers with. If your credit score is 750 and above, if you keep your credit score high, I genuinely believe, right? I genuinely believe there's nothing you need to worry about. You will get access to personal loans, you will get access to credit cards. However, right, if you don't have a credit score, if you are late on your payments, if you've defaulted on a loan, I think the additional cost that's now come in, right, will make the lender think more before lending to you.
Okay, and is there also, slight risk of higher defaults now? Already the personal loans are, charged at a much higher interest rate. Some of the small fintech companies even charge borrowers 20-25% in some cases as well, even more maybe. Would higher interest rates now lead to higher risk of a default?
Right. So see what the RBI has been saying, and I think everyone in the industry agrees with what they're recommending. They're saying that tread with caution on unsecured personal loan and increase consumer awareness. So there's been a big push even with the digital lending guidelines, right? Telling people that hey, apply from authorized apps which have the required partnerships in place with the banks and NBFCs. There is a key fact sheet which has to be provided to a consumer saying what interest are you paying, what fees are you paying. So I think there is a need to make sure that consumers are educated, and this notification is meant to reduce the risk of future default. So I don't see it as resulting in more default. I think this is a signal to the market that please be careful, make sure the consumer is educated and tread carefully. So yes, we have to grow, right? Because India is an emerging market. Credit typically, right? Retail credit grows at 3 times of GDP growth. So if our GDP is growing at 7%, retail credit has to grow at 3 times that, which is 21%, right? So I don't think this move will result in greater losses. If anything, I think this move by the RBI is creating more awareness and more, prudence in who we lend to and how we lend to.
Absolutely. But the bottom line clearly is if somebody has a high credit score and if somebody has been prudent enough in taking loans and borrowings and has been proactive when it comes to maybe prepaying your loans as well, then you may stand a chance to continue to have your loans, future loans as well, almost at par at what you have been getting so far as well. Many thanks, Mr. Shetty, for being with us on this special edition and explaining very vividly to all our viewers what the recent step by the RBI really means and how will it really impact consumers and borrowers at large. Always a pleasure having you and hosting you with us on Business Today Television.
Thanks, Sakshi.
All right, and with that, we will wrap up this edition. But do stay tuned on to Business Today TV as a whole lot more action continues from the world of business and stock markets on the other side.